Hello, it's Robert Miner with Dynamic Traders Group with our Saturday, January 26 DT Reports video update, especially for our YouTube subscribers. This is just a small excerpt from what we do for our regular subscribers, which is frequently about a 20 to 30 minute video each Saturday for our DT Report subscribers. But I'm going to give you some good information today that you might want to be aware of over the coming days. And if you like what you hear, subscribe to the channel. Check us out at dynamictraders.com. Well, let's get started. Well, just about every week we take a look at the stock indexes, particularly the S&P. So let's take a look at the ES. If you listened to or watched our video from last Saturday, you'll know that I was anticipating, and this is the prior Friday's high, that there was a potential we had completed a daily high here, that we had a kind of a rising wedge of 1, 2, 3, 4, 5 in Elliott wave terms. And we had our dual time frame daily momentums do a look back overbought. And then on Tuesday, after the holiday, we made a bear reversal in our momentums, and we had a two close reversal. Two close reversals when we closed below the closes of the prior 2 days. That looked like a pretty solid reversal, and we probably completed a high as anticipated. I personally went short. Because I follow my own advice. However, I did get stopped out on Friday. Over the next couple of days, the daily momentums reached the oversold zone. And in fact, on Friday in the cash index, they made a bull reversal on Friday. It just missed a bull reversal by less than a point in the ES, but more than likely that indicates that we're going to make a new high, but it hasn't voided the probability that we're making a fairly substantial high here within the next few days. In fact, now we have even a more clear pattern, at least 1, 2, 3, 4 into Wednesday's low. If that's the case, notice how I say that. If that's the case, then the 26.95 to 27.19 zone would be the ideal zone to complete a wave 5 high. And that's the 127, 162% external retracements of wave 4 and the 78.6% higher time frame retracement of the December decline. So that'll be the probably the maximum target zone on the upside to complete the advance. Let me close that. To complete the advance from the December low. Now, if this is a 5-wave advance, as I've mentioned in prior updates, it would indicate that we have potentially completed a pretty major ABC correction here and are not in the initial stages of a bear impulse trend as I anticipated, but we'll take that day at a time and week at a time. What we do want to be aware of is we're near the extremes for a weekly high. We'll look at the weekly in a minute. What's this 4 trading day count from the Wednesday low? Well, following each daily momentum low over the past month or so, about 6 weeks, is we've had 4-day advances off the December 26th low. It was 4 days up to the closing high at least. We had just a 2-day decline. Then we had 4 days up, another couple days sideways, the daily momentum bear reversal, another 4 days up into a week ago Friday's high, daily momentum bear reversal. And now it looks like we're making another advance. If we continue with this pattern, 4 days from the Wednesday low would be next Tuesday, the 29th. The FOMC announcement is the 30th. We usually have reversals within a couple days, plus or minus, of that announcement. And on Thursday is 100% alternate time projection of the time range of this correction that we had back from October and early December, and that was 24 trading days and 24 trading days up from the December 26th low is Thursday. So these are all key time factors, not just for a short-term daily high like we've had the last 2 to 3 daily highs, but for a higher time frame high, because we'll be completing the entire advance from the December low. So I'm looking for 2 to 3 days, maybe even up to 4 days, sideways to up, but following the next daily momentum bear reversal, ideally if prices around this 26.95, 27.19 zone, that will complete the advance from the December low. And as of last week, we've also driven the 8 weekly momentum into the overbought zone, and actually again on the cash SPX Cash S&P and their 8 weekly momentum actually made a bear reversal last week. So that's another warning that we're near the extreme on the upside. So let's get prepared for reversal signals on the daily data that it should coincide with a weekly reversal as well, and then we'd be sideways to down for several weeks. The lesson learned in the last week is that your technical position may indicate that you're in a position for a reversal, and in this case we had some price and time and dual time frame momentums all in place as of the end of the prior week, and we made then a daily reversal signal, but the market simply didn't follow through on the downside, and a couple days later we had our momentums oversold, so more than likely we're going to make a new high. That's why we put stops in. We identify trade strategies with a high probability outcome and acceptable capital exposure. And if the market continues its trend, we don't ignore the technical information that continues to indicate we're probably at or near a higher time frame trend. We just look at the new technical position, the timing position, the price position, and the momentum positions. And so now they're all in place to complete a weekly high next week, right around the time of the FOMC announcement. I'm not going to look at the interest rate data today, but just keep in mind bonds and notes have significant time factors to complete a pretty significant corrective low right around the middle of next week as well, and be followed by a continuation of the bull trend to a new high. That's in bonds and notes. That'll be a great setup. A quick look at the euro, because we also looked at that for a potential trade setup in last week's YouTube video, and we were looking at this that we're at or near a position to complete a daily low, which would be followed by a corrective advance lasting 3 to 5 days. And as of a Wednesday, we did make that higher close, and again, it was like a 3-close reversal, also closed above the closes of the past 3 days. So more than likely, we had completed that daily low, and we also made a bull reversal and dual look-back bull reversal in the daily momentum. So I personally went long, and of course I was stopped out the next day on this big decline. However, as I wrote in our Thursday night update to DT Report subscribers, is that this is even a more firmly probable at the end of a 5-wave decline as of this big decline on Thursday. And why is that? Well, the close was right in the 127, 162% external retracement, so what I got labeled a wave 4. We were just 1 day off of the low to low time factor. We have all these prior lows, both intraday and closing lows over the past 2 to 3 months, and we had already made the dual look back momentum bull reversal in the daily data, even though we had this big spike down. So as I put in our Tuesday night update, is this probably has finished off the decline just when everybody else is bearish. Be aware that on the strength of the daily momentum position, the wave count coming down, and the price relationship at the end of Thursday, we probably made that low that I anticipated a few days earlier. So again, look for long trade strategies, and I went long, got stopped out earlier in the week, but Friday I went long again. This is just the 15-minute data. And let me just put a little more data on there. On the strength of the Thursday incredible coincidence of time, price, pattern, and momentum to complete a daily low, I was taking a look on Friday morning as we were approaching the more active trading in the U.S. Of course, it's actively traded much earlier in UK and the Eurozone. But I took a look and we had this congestion period. So I went ahead and bought when it broke out of this congestion period. And this is both being smart and lucky. It didn't stop going up for a couple of hours. Of course, got into congestion the last couple hours or so of the day. But it was a great trade setup. And people may look at this and say, well, you know, your intraday momentums were overbought and there wasn't any real pattern here. What I was looking at is the strength of this low on Thursday, and that was just very compelling that we completed a daily low, and we have 3 to 5 days sideways to up that would likely reach at least eventually the 50% retracement, if not higher. And boy, that's it ended up being a great setup. I'm still long in that trade, even though by the end of the day, let me go back to the daily data. By the end of the day, we were already near the 50% retracement, but we should be sideways to up for another 2 to 3 days. The daily momentums are bullish, they're not overbought. We've got two time factors near the end of this week. One is the high to high on Friday, the 31st, or excuse me, that's Thursday, the 31st. Friday should be the maximum on the upside because that's a 62% time retracement of this 5-wave decline, which is probably a wave 1 or A. So sometime between the middle and latter part of the week, we should complete this corrective advance. We should have at least another 2 to 3 days net sideways to up. So that's why I've moved my stop. So I'm certainly at break even after this big up day. But I'm hanging in there for until there's a technical reason to exit the trade, and there's not one yet. All the technical positions indicate that we're going to be sideways up for another 2 to 3 days. So I'll trail that stop if the market continues higher. But I wanted to show you that is that we don't, sometimes it's not an ideal setup where we enter, but it's the ideal setup on the higher time frame, in this case to indicate we'd made at least a daily reversal, going to be sideways to up for several days. So you need to jump in if we're fairly near the reversal point. You need to get in that market and not wait for the ideal setup. The beauty of doing forex is that you can do it really low leveraged if you want, and you can do a really small position if you want, so that you don't have a lot of capital exposed, but you want to participate if the market does make the reversal that's anticipated. So that's it for this week. We'll be taking a look at next week. The couple of things you want to look at is more than likely by the end of the week, the euro will make a corrective high. The dollar will make a corrective low. Be good setups for long trades that'll last more than a few days because in the case of the euro, the weekly momentums are bearish from the overbought zone, so any rally should be a correction. And the next week again is a weekly target to complete a weekly high. And of course, the dollar is making a corrective decline. It's already reached the 50% retracement. Should be sideways to down for a couple more days. And the weekly momentums are bullish. The higher time frame trend is bullish, so this should be a corrective low, followed by a continuation of the bull trend. Great setups that should be both the euro and the dollar next week. And of course, probable high around Wednesday for the stock indexes, and a probable significant low in notes and bonds next week, right around that FOMC meeting. That's it for this week. Take care. Be back with you next Saturday.